This is a dirty little bank secret part 2. Make sure to favorite this video and save it in case the banks ask me to take it down. So currently right now there are certain selected banks. If you have an off the land purchase, for example a house and land package, and you have purchased it about 2 years ago and now the valuation has gone up, you can actually borrow 80% of that new valuation. But psst, they won't tell you that. You gotta ask for it. And just like always, let's go to the drawing board. So currently I have a client that purchased a house and land package in Austral on this street. So they purchased it for $470K and they exchanged on the 21st of May 2021. So these are my clients for the last 6 years and I helped them build up their property portfolio. This is their third property. They asked me before, is this a good buy? Well, is it near the airport? Yes, tick, buy. And right now I'm getting their finance, I'm getting a valuation done, and look at the valuation on the land. Woohoo! In 2 years, it went up by 100K. Now you see this, 19th of May. I'm waiting for a few more days, which is next week, to hit 21st of May to apply for the 80% against the new valuation. And this is what it looks like. So for example, if the valuation never changed, for example, the land is $470K and the bill is $375, which by the way, this is the bill contract. The land and bill original cost is $845,000 for the purchase. Now the client has already paid the stamp duty, yada, 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 and they already paid down 10% deposit of $84,500. Now, technically, guys, if the land and bill price didn't change, basically, they pay 10%, they have to pay another 10% to complete the 20% deposit because we're only borrowing 80% to avoid mortgage insurance. But by applying this dirty little bank secret, the land now is $570K, verified by valuation, the bill is still the same, so now the final value of this place is $945K. 80% of that is $756K, so the difference of that lending is an extra $80K lending. Now, if the land didn't go up and I didn't apply this policy, the client would have paid another $84,500 out of pocket to complete the purchase. But because of the dirty little bank secret, I'm allowed to borrow 80% against $945, which means I can draw $80,000. And right now, instead of my client paying another $84,500 to complete the purchase, I can use the extra $80,000 equity. Minus that, they only need to pay $4,500. Now, obviously, you have to service a loan, which my client does. But in this case, rather than paying another $84,500, they only need to pay $4,500, which means they freed up $80,000 of their cash flow. And because my clients are self-employed, cash flow is king. So what would you do with an extra $80,000? Well, as a no-brainer, this $80,000 will be put back into the business to make more moolah. Or maybe if they listen to my loan structuring advice, get a loan of $756K and then have a offset account and pop this $80K there. Woohoo! They just got a spare facility for $80,000, which on day one is offsetting their interest on their home loan while they're not using it. If you're new to this channel, follow for part 3 for more dirty bank secrets.